Hi everyone and welcome to this week's market commentary. I hope you're all doing well. Had a fantastic weekend and a great trading week. There's not been a great deal going on last week. It was a bit of a quieter week. We have had some interesting movements, but not in a way that's offered a lot of great tradable opportunities. Day trading has been a bit more vibrant with opportunity versus the swing trading, but there are some really interesting levels I want to cover in this week's market commentary. Okay, so if we get started, one of the markets that's going to be quite interesting in the coming week or weeks is going to be gold. There's a couple of markets and what they've done. You'll see on gold, we made it back down or almost made it back down to these lows. We didn't quite make the lows, but we've definitely come into this area of support where we've pushed up. Now we've seen a reaction from the 50 moving average. Now the bit that's really interesting for me, this is going to be more from a sort of short-term point of view, but it will be interesting to see where do we go, because this candle here that I got on last Thursday, although that is a green candle, although that candle finishes in positive territory, the reality is, as of this morning, we've now broken down. It's more of a reversal candle, and the story within relation to that is to do with the wick action, because we open here and we close here. However, we do manage to get all the way up there before pushing back down, and that's what offers a reversal signal. And that's why it's not a surprise to see this market come down. So what we could look for in gold, not necessarily from a swing point of view, but it's certainly got some clean air in between these levels. So if I was to draw some levels on, get a little bit of space further down today, and then if we can get past this sort of level here, and maybe even this further one more here, we've definitely got space to the downside through there. So we've got a little bit of traffic we're coming into, but that's good because we want an area to trade. So if we can come through there, and then we could look for short opportunities. We could possibly look for some short-term bounces here, but overall the market has been trending down. Now, from a swing point of view, what would be the opportunities? The one thing I've been keeping an eye on for a little while, if I just pull it back up a little bit, is the lows of November from last year. The reason being is we are in a very, very large descending triangle on gold. We can just see if we load it up here. Now we have had an initial breakout of it that gave us those lows in November, and that's why if we can break these lows, that would take us into a new low, because ultimately, although we have seen a bit of upside in gold, it's never proven itself. So from that perspective, we're still creating a bit of a short bias. What's also interesting, if I take last week's candle, you'll also notice that although it finished green, it does have that same and similar type of reversal opportunity. So if we break the lows of last week, that's where we might see that short-term move to the downside. What we had last week is we had a bit of volatility, then we got some big movements on the US indices. So I'm just going to load up the Dow. But what's really interesting about this, so on the Wednesday, my apologies, we had a large move. So the Dow moved, or it finished 280 points down, which is 1.5%. So that's a very, very big move in one single day. The actual number of points it moved would have been more than that because there's a little bit of wick either side. The next day, we've done another big move, but it's then shown a reverse. So very similar to gold, what's happened is we've come into this area of support and now we're bouncing up. But the reason that this is interesting is, what does it tell us about this market and how can we then trade that? Well, if I'm a longer term trader or a swing trader, I can see that we're no longer trending up. Why? Because we've made a new high, we've pulled back, then we've come up, and now what's happened is we've made a slightly lower high. We're then coming down again, and what you'll notice is we're actually not really making a proper lower low. So what that tells me is, although the trend up is no longer valid at this moment in time, it's not started a trend down either. So although I've got a slight lower high, it's not enough for me to think there's momentum. So where it becomes of interest to me is, can we break the lows? And if we go through all the US markets, so if I take a look at the Dow, the first thing I would look at is, can we break these lows, which were about 17,530 roughly. Now we do have a little bit of support that we're going to come into on the way down, But if this starts to move up, then it comes down again, then I'm confident that the upside is running out of momentum and a break of these lows could really prove to be quite valuable as an opportunity. If I also look, for instance, at the Nasdaq, you'll notice a very similar pattern. It's a little flatter and the areas are a little bit cleaner. And I was looking at this over the weekend, just trying to establish the size of the consolidation. But you'll notice again what we have is a consolidation, but again we're getting slightly, ever so slightly lower highs. Now we've seen this before on the daily here, so we had lower highs here and then we broke up. So we don't want to jump into it too early. That's why I want to see this move up. That'll confirm the consolidation. Then I could look short over the longer term. Obviously from the upside point of view, so let's just lastly look at the S&P because there is one little catch and there's always a catch. The S&P didn't make the lows. Very close, but it didn't make them. So the question is, do we want to maybe come down and bounce off of them and then the S&P completes its consolidation and then we're all lining up? But the reality is with each of these markets, now that we've stopped trending, this is where the opportunity will come from. So as we go into consolidation, what do we now want? Well, firstly, we're not too keen to maybe trade in the middle of this because there's a lot of volatility, but if we can break up or if we can break down, because we've now got a double top, which has created a potential reversal, then in turn we've come down and we've not trended down. Therefore, that suggests a sideways market. If we break out of that, that could provide lots of good swing opportunities, day trading opportunities, and even actually some positional opportunities. Now, just to finish this week, I want to take another look at crude. Crude's getting really interesting again. If you remember from last week, I was saying in the last couple of weeks, we've seen a bit of a move up from here. It's now stalling and starting to push down. So again, if we can get back to these lows based on the weekly, there's no doubt that we've got some clean air back down to that $35 a barrel or $30, roughly $35 looks the stronger area. So from that point of view, this is winding up and winding up and winding up. So if we can move down, that could be a great opportunity for us to consider the short on crude. Alternatively, we're really going to need to break the highs, which was about 5,400-ish, maybe even 5,500 for the key round number. So there's quite a few really interesting areas that we're getting close to. We're building up momentum, and that could lead us into, and it's quite common that April and May we can see some big moves. Not every year, of course, but we do see that often. So from that point of view, they're building up. So it could be that we're coming into a really good patch where we can get some real nice moves. So keep your eyes peeled. Make sure you're setting alerts at these key levels. Have your strategy ready. Be prepared and be ahead of the market. So that's us for this week's commentary, and I'll see you next week. All the best for now. Bye.